Hi, Warriors. How are the dog days of summer treating you? Okay? That means be nice to your dog because it's dog days. Everyone. Your dog knows everything. He knows how you feel. He loves you anyway. Anyway, all right.
And then he craps on the carpet.
And then he looks at you with guilty eyes and you pick it up and then you go, oh, that's okay, boy. Right? Or do you kick him, right? Huh? I
No, I
better
don't kick him.
report you to. I
I
don't
don't.
know
I
what
don't
the
kick my dog.
anti-cruelty society is in the UK. I think you guys need one for people like we do in the US. Anyway, let's have a good week, everybody. And I just wanted to start off with the Aussie play from last week. I'm taking partials here. I think there's an opportunity to buy a retrace. Um, Best guess 64.80, maybe about halfway back sometime this week. I don't know what the catalyst is, but that's my plan. And then, the big question facing everyone, and I'm really glad that we have Katie Stockton coming in today to get her view. But this is a question I'm asking myself. So if I am, I'm sure many traders are. So, I mean, here's the bull case. And, you have to look at both sides of the market. What's a bull case? What's a bear case? And see, have your mind open. So, when I look at this, that doesn't look like it's there anymore. But, oh yeah, it is. So that the reversal we had is going to set the stage for one more rally for a three up here. Where the bear case is, where should I sell the retrace? Right. So uh, a level I have is 50, a little over 54. I mean, 54 was big, and you have 54.50 as a fib here. Not sure where that's 61.8. 54 is 53.86 is halfway back. So right in this zone, we'll see. Why don't we take a poll here with everyone that's in the room? Do the S&Ps have a new high left in them, or is this just going to be a failing rally? What do you think, guys? Well, what does Y mean? Failing rally. Okay, failing rally, Mike. Why? All-time high. Not sure yet. CPI will bring it down. All-time high. Okay, so it seems to be more all-time highs. And I could see why you would say that. I mean, we're conditioned after a million years that every pullback is going to make a new all-time high. Okay, because the scenario, even the bears, they're waiting for a September, October high around 6,100 or higher for the top. So anyway, that's most of the bears. That's what they're waiting for. Even the people that were bullish going up into it.
That's
So
all well and good saying
yeah,
all-time highs, but the important question comes if you're trading it, where are you wrong?
at all-time highs.
Yeah,
You
where you're
mean
wrong is
oh
not going to be
oh you mean
all-time
if you're
highs.
long
Yeah, if you're
or if
looking
you're
for all-time
short?
highs, where are you wrong?
You're wrong under Monday's low. In fact,
Yeah,
Monday's low in every asset is pretty key. I could run down them. You know, that was Monday's low on the spike. Aussie, that was Monday's low. Canada, the inverse, that was Monday's high. So you have a lot of stuff saying that Monday was important. Here's gold. This was Monday's low. If it got back down under there. Silver, Monday's low took it out. So there's a lot of different markets where Monday's low is pretty important. This was, I think we had a high on Monday in yields. So you know where you're wrong if you're getting long there. Monday's low. I mean, you could probably find tighter stops, but that's a real stop, in my opinion.
Yeah.
Does that make sense to you? I mean, that's pretty,
Yeah,
there's
absolutely. Absolutely.
500 handles. And you're wrong. I don't know. You could be wrong selling 50% retrace and then you're underwater at 61.8. Do you put another one on? Do you give it 78.6? So that's what I mean. So I'll probably probe it in here to try it. Because I think
Little
we're
ones.
huh?
Yeah, little ones. Go fishing at the
Yeah,
the
yeah,
level,
yeah,
the little ones. If you get
yeah,
stopped for 20 pips, you try the next one, but
right,
you don't want to hit two. If you hit two or three losers trying to fight the move up, then you
right,
know where we're going.
right. But I think I have to try it because I think I mean, I saw the fear meter. We're still that greedometer. We're still in the fear level. You know how it's like a
Yeah.
meter, extreme fear, fear, extreme greed, greed. So we're still on the fear side, but I don't know. I think there's an awful lot of complacency from all this damage that we're just going to blow to new highs, but I've been
Yeah.
surprised before. What do you think, Blake?
I'm not in the new high camp. I'm in the market's going to
Retrace?
be sold. Yeah, I think there's still a lot of risk looming, and I do believe that the market's kind of waiting on kind of
Jackson Hole?
pins and needles, and with the situation in the Middle East. So I think
Okay.
this situation is probably going to worsen, and the markets are going to grind higher right until that happens. So I don't
Okay.
think there's any real reason to be like
Long?
I don't think the markets are just going to roll over to roll over. I think that they will need a reason to roll over, right?
Okay. Yeah, that's going to be a pretty good reason.
Yeah. But
So
when is that? I mean, we don't know. I mean, it could, and
by
while
the
we're in a
end of
slow
this month,
market, what's that?
by the end of this month, or
Oh,
if
okay.
they wait
Well,
any longer than that, they may wait for the Jewish holidays for retaliatory strike, which is in September. They like to hit each other and ruin each other's holidays.
yeah, I mean,
So
if that's the case, I mean, we could have, a couple weeks of just grinding
yeah,
around. I mean, it's
yeah,
August. I don't want to dismiss the fact that it is August. It's most people are on holidays. I'd say most. A lot of big asset managers happen to be on holiday, so there's no real reason to be um the volatility should pare back a little bit between now and the end of August, but again, if there's some sort of Middle Eastern escalation, I think the floor will come out of the markets real fast, and timing that is going to be difficult, right?
yeah.
So
So you just have to probe and protect, like
yeah,
every other time.
yeah,
Just
I think that, and I think maybe in intraday, you have to have more of an upside bias. You got to imagine that during slow markets, it's tough to short. So you got to buy dips while you can see them intraday for risk appetite, and then always keep your stops close because a couple missiles get fired or some headlines, and next thing the market comes under pressure. Matter of fact, Dale, I got a
go
question
ahead.
for you. It seems
Go
like
ahead.
the Ukrainian Russian situation is heating up a little bit, and Ukraine's
Yeah,
pushing a lot, doing a lot of pushback in Russia.
yeah,
Do you think that's going to affect the markets at all?
yeah. And I would take what uh, Thomas Malinan had to say. He brought up the fact that at the I think it was the Winter Olympics 2 years ago, Putin went to visit Xi in Beijing and waited for the Olympics to be over and went into Ukraine a few days after. Okay, so he was concerned that the window opens up for escalation everywhere after the Olympics. I actually think that Putin used one of these different types of bomb, vacuum bombs. Um, you know, should I say it? I think that he's going to this incursion by Ukraine, that he may use a tactical nuke.
Really?
Yeah.
That's a pretty bleak outlook, Dale.
Well, you asked me.
Yeah, I know. I know. Again, I did.
I mean,
I retract. I retract,
so,
Dale.
and someone said to me, well, he has to be careful about, wind direction, because it could blow back into Russia. And I said, he doesn't care.
Yeah.
Okay. He doesn't care.
Ryan, what do you have to say about all that? Tactical
Yeah,
nuke.
it's a tactical nuke. I don't know. I think that's crossing a line. Even he doesn't want to cross. He's still playing games like he was saying that there was a fire at the Zaporizhia nuclear plant, but really all they're doing is burning car tires in one of the chimneys to make it look like there's a fire.
I heard reports it was actually Ukraine that bombed the plant.
Yeah, well, Russia says it's Ukraine. Ukraine says it's Russia. It's the back and forth. I think the only thing we have to think about is that, Ukraine piling into Russian territory. They've not stayed in Ukraine. They've gone across into Russia now. That makes it a step up in hostilities, and
Okay.
Putin's got to do something against that. So
he's not a guy that really respects red lines. He's not Obama. If he has a red line, and maybe this incursion could be it. I wouldn't put it past him.
No, but one small hope there might be is that this move has pissed off a lot of Russians who have had to basically pick up their lives in the middle of the night and run away, and their army hasn't helped them, their services haven't helped them. So there's a lot of heat on Putin at the moment as to whether he's losing control of this. Which, if he does, he's more likely to step back rather than get out the big hammer sort of thing. So let's hope it comes to a safe conclusion sooner rather than later. It's been dragging on too long.
Okay, because Harold, who knew Putin, who met Putin, says that the way he de-escalates is through escalating. So if he set one off, Europe would poop in their pants, and so would we. What would we do about it? We wouldn't do anything about it. Anyway, so just just something to, huh?
On that cheery note,
crickets.
Anyway, so all right, we'll see.
You want me to take over, Dale?
Yeah, take over before I get tactically nuked in my house.
Yeah. Well, you know what we've got this week.
Watch this before Blake takes the charts.
I'm sorry, I didn't. I clicked the button. What were you looking?
The gold silver ratio. I mean, if you're a precious metal bull and you're more of a silver bull, then the gold silver ratio, which you can trade on a CFD, is probably a decent top pick, because silver should lead the way, and we've had one heck of a rally in the gold silver ratio up here.
So you think silver might start to outpace gold at this point?
Today it's starting.
Okay, I
think it's starting.
Got it. Yeah, I think a lot of silver bulls have been really pretty bummed out at this move in silver, where gold's held up very well and silver's just come under a lot of pressure as of the last couple of weeks. So good to bring that up.
Rally to new all-time highs in the Russell recovering will not hurt silver. Okay, silver seemed to be more vulnerable to the liquidity problems when markets are selling off than gold.
Gotcha.
That's what I see.
Gotcha. All right. Well, thank you, Dale. Couple things I want to point out. Well, first of all, today is a very, very slow day. And I mean, as I said on the week ahead video, the only two things that I really care about today, there's a 3-month and a 6-month bill auction. And that's really the only thing that's happening today. Japan's been on holiday. They're going to be coming back And as I said on the week ahead video, the great news is I didn't even pay much attention to the markets yesterday because we had like I don't know, about 30 people over at the house celebrating my son's birthday, and I didn't even pay attention to the market because Japan was on holiday. So it's like I knew we weren't going to be down 12%, right out of the gate. That I was pretty happy about that. So, this week though, we do have earnings from Home Depot, Cisco, Walmart. We have Applied Materials, Ross Stores, Deere. We got some earnings starting like tomorrow that I think are going to be kind of important, especially with the retail community. We have a lot of UK data this week. I'm gonna Ryan. I want to ask you really quick. The sterling's been really, in my opinion, very unreadable. Other than we stopped at the 50% retracement of this entire bounce. We came out of a channel, but not very aggressively. So I would think that a move back to 128 is going to give us some problems. But how are you reading the sterling right now, especially like with monetary policy? How are you feeling about what the Bank of England is going to do here?
Yeah, it's been a bit messy. Yeah, sorry, it's been a bit messy of late. We were seeing the pound looking really good as it ran up to 130s. Obviously, the dollar side of this one took a beating, or we saw dollar gaining. So yeah, it's been all over the place really. We got some key data this week: jobs, CPI, retail sales. So the whole slate coming out, and that'll get the market going on what it thinks next for the BOE. But the BOE said it's going to go slow and steady. I don't see any reason why that won't be the case for the quid. But yeah, for cable, like you said, we've got two trends in play. You've got that longer trend from April, which is still in play because it stopped and bounced off the 50 fib. But we still got the downtrend from 130 is valid because we haven't quite got to the 38.2 fib of that move, which I think is also around 128. So 128, 128.50 are my key areas to break this short-term downtrend. Do that, and we may be on for 130s again on the highs.
And you notice there's like the 50 DMA has capped us today, actually. The 200 DMA seems to be maybe around, it's support around the 120. Well, it's around the 50% retracement. It seems trapped. And we have so much data this week that's coming out that can move the needle. And that's why I think that if you guys are looking for things to trade, sterling might be it. This week, as Ryan pointed out, we've got a lot of UK data. We have the RBNZ this week too. Now, there are some people speculating that the RBNZ could cut rates, and we are at, just so everybody can see here, we're at the 50% retracement. We've got, I can't tell you how many times over the last several months we have written down on our bias chart here 60-40. I mean, 60-40 is like a number I think I type it every day, either as support or as resistance for the last several months. And you can see it's been just a big area of contention. But I have to point out that we have created some pretty key support down below. I was hoping, because of the bullish outside weeks that we saw in the Kiwi and the Aussie, we would have got, maybe some sort of,
follow through.
Well, no. I'm expecting follow through. We are seeing follow through right now. I was hoping there had been a little bit of a pullback with these outside weeks and whatnot, but we have not gotten that right now. I mean, right now we're getting a recovery. But Ryan, what do you think is going to happen with the RBNZ this week? Do you think they're going to cut? I think most economists are split on cut or leaving rates unchanged. So where are you at?
The median expectation is that rates stay unchanged from all the analysts and economists and whatnot, but the market pricing is some 70 to 80% for a cut. So I think, it's a bit of a coin toss, this one. I think a cut would be more of a surprise perhaps than what staying on hold would be. But then it's probably going to be something where it's a narrowing door as to how long they'll keep rates staying up this high, because they've got one of the highest, alongside the Fed, among the majors of interest rates. and they've seen CPI go down. So I think we're in for a bit of two-way potential for this one. If they do cut, you'll see a knee-jerk lower. But given the bounce we're seeing, is that maybe a dip to buy? So, down towards the sort of 59 area, mid to low 59s, that might be a little bit of a buying opportunity.
Yeah, and let's not forget, Ryan. I think we should probably point out here that that with last week, Banxico actually did cut rates, and the dollar and it was a very similar situation. I think you had market pricing was expecting that there could be a cut. Most economists didn't believe there would be. And they cut, and the dollar mex actually dropped below 19. So the Mexican peso strengthened as they cut, and we could get a very similar situation with the RBNZ this week, but potentially. I mean, it could be a more of a as you pointed, narrowing door, or maybe it's a one and done type of situation where they cut, but it's more of a hawkish cut. So I think the Kiwi is going to be pretty much in focus this week as far as that goes. And also another central bank that's reporting, or that's not reporting, they're actually they have an interest rate decision, is Norges Central Bank. You guys got to keep an eye on this one, because we've had this double top here, and the double top actually pressed the neckline last week. We're at the 618. So any strength in Norway is going to push us back down towards this long-term channel supports that come in, somewhere down in this neighborhood. So I would weigh on the, or err on the side of being on the short side. I've played the US dollar Norwegian krona short the last few weeks above 11, playing this double top here, and it's paid out really well. But we do have the Norges Central Bank this week, so you got to be a little bit careful. Couple other things that I think we need to discuss. Crude oil is rallying, and this we just completed. If you guys didn't see it from last week, I'm going to point it out for you. We just completed our inverted head and shoulder pattern just today, like literally a couple hours ago, or maybe an hour ago. And I'm not saying that you should be short crude, but if you've been riding it on the long side since last week. So if you're ForexAnalytix client, and you go to the 4-hour chart from last week, let's go over to it real quick. And you've been playing, it came off the neckline, and we've been playing it higher since last week. We have completed. So I think if you're bullish, you got to be a little careful, especially if we came into this week with, yes, there are geopolitical risks. I think being on the short side, and I know we've said it a couple of times last week, being on the short side of crude oil in this environment is crazy, in my opinion, because any headline hits, and crude oil could be trading at $80-$85, like literally within a blink of an eye. But if you've been playing it tactically on the long side, we could start to see some two-way price action around here, especially with absent any headlines. So just keep that in mind. I think that I would still be buying dips, but you just got to be a little bit more careful with.
Maybe this is also part of the Canadian USDCAD bear case.
Yeah, and look at what's happened with the CAD. I just want to point this out really quick. We could go with the Euro CAD. We're at the 38% retracement. We're basing here. You go to the US dollar Canadian. We are at the 618 retracement, and I don't know where my fib went, but I'll put it back on right now. You can take this low to this high, and you can see there's a 618. We're right at the fib. Matter of fact, if you
sell rips,
well, we have a bullish 618 retracement pattern in play, because
you're long.
Yeah, I mean it's been there.
Well,
it's been there since last week. We can rally it back to 137.90.
Yeah,
it's very easy, right? I mean, if you want to play it to the long side, that's the way to do it. But that's been up there since Friday, or Thursday or Friday, I can't remember. Anyway, but these are if crude oil starts to pull back a little bit, you might see the dollar Canadian a bit up. Ryan, I know you had some commentary on crude oil via ForexAnalytix overnight. What are your thoughts here?
Yeah, I think we're seeing this pick up just on the risk thing going on, Middle East. We saw that big drop again when we got the ISM manufacturing, and we're still seeing demand problems and manufacturing gloom around the world. So we're seeing a pickup in risk if that keeps going. Oil's heading higher. If it suddenly dissipates, and then we're probably going to head back lower again. So it's a bit binary, but know what headlines are driving it at the moment.
All right. Yeah, very good. Hey, real quick, since we got just a few minutes before Katie Stockton gets here, yen. I mean, obviously the yen's on everybody's mind right now. We are closing in on the 148 level. Don't forget the dollar yen 38% retracement is nearing 150. So we're not too far away. Between all of this resistance zone that you see up here, just above it, we've got a lot of resistance, and this would be the broken channel. Underside of that channel would take us, back to 148 and change. So there might be a little bit more upside in the dollar yen. How are you feeling about the yen here? And now that we've seen this, yen pullback, and Ryan, I have to mention this. Everybody is looking at the yen. It doesn't matter who they are in the markets. Everybody is a yen expert again. So what are your thoughts on the yen as we approach this key 148 to 150 level in the dollar yen?
Yeah, I think you're right. It is key. We got resistance at 148. We tried that from the bounce. We got up close to there twice, couldn't get through. It's trying to build now on this 146.50, 147 area. So if it manages that, then it should be pushing on past 148. I've got an old fib 148.60s, I think, 60.70, which was an old resistance support line. If you go back, if you look left a bit, it comes in. So there's plenty of levels up here before we get to 150. Obviously, volatility, we can move 100 pips at a time. 152 is the doozy level. So while we're below that, it keeps the downtrend in play from 162s. So that 152 level is a bit like your 5400 in S&P, and that's the key level for me. But under 146.50, then it keeps a downside on in the pressure, and we're looking at 145s, 144s again.
Great. All right. Well, thank you for that. And Dale, I'm going to come to you real quick in just a couple minutes. I do want to push out or push. I don't even know what I'm talking about. It's Monday morning. I wanted to talk really quick that equities futures are at their highs across the board. Traders have stepped in. Obviously, no headlines over the weekend. No major headlines that the market was really worried about. You can see the S&P is grinding higher. We're nearing a 50% retracement. I think we've got the previous channel that was broken. We've got maybe about another little bit more to 5,400. If you listen to the week ahead video, this is the level that I care about, around 5,400. We're about 35 points away from there right now. So we're closing in on it, but you can see the NASDAQ futures are grinding higher as well. You got Dow futures at their highs of the session right now as well. So Dale, what's your best trade of the week? What are you thinking this week?
I'm going to try it there too, Blake. Okay, so
try what?
A short in the S&P there.
Okay, where, like here?
At 5,400, 5,400.
Oh,
halfway back. I'll sell a rally up there.
Here, Dale, look at this. Here's my notes from the week. This week, sell S&P from 53.95 to 54.70. Those are my notes from my week ahead video, which I'll be following up with every week.
470, 61.8. That's possible too. Yeah.
Yep. Between here and the 618, I am basically a seller of risk somewhere at this level. Whoop, shoot, I didn't.
My highest conviction trade still is short Canada, long Aussie, short the dollar, long euro on weakness. So I'm still believe what happened a couple of weeks ago in the dollar, that all we've had, if you pull up the Dixie, has been pretty weak consolidation compared to the break that we had.
All right.
So I'm a dollar bear.
You're a dollar bear, and I don't disagree with you. I've still got my euro longs from 2 weeks ago. I still think we're trying to build a bull flag pattern. I still think we're going to break above the 110 level, but I've pared back. I've got like half of the position. I was pretty aggressively long euro as it came out of this bull flag pattern, but I've pared it back to about half
I think
size now.
that this
So
was the surprise of the sell-off. Because recency bias, we've been talking about this for months, would say that people are going to go to the dollar as a safe haven.
yeah.
And you and I, Blake, said that there's a possibility that that's not the way it's going to go. It could be people leaving our market and maybe looking for things overseas, and people leaving the dollar. And that's the way it's played out so far.
Yeah, I definitely think that the shocker or the wrong-sided move for the market is going to be the euro trading and getting a foothold above 110. And you know, should the euro get above 110, I think we'll be on our way to, you know, the mid 1-teens by the end of the year. Yeah, I think so too. I think that's that wrong foot.
Because the other side of the trade is pretty ingrained in people. It's going to take some P&L hiccups for people to finally, you know, get the hang of that type of correlation. That's gone for now.
You know, there's too many traders that haven't been around, and you know, I'm gonna Dale, I'm gonna tell you a funny story, real quick. And I know Katie's with us, and Katie will probably get a kick out of this too. So I was in the gym a couple of days ago with me and my gym buddy. We're there, and you know, so he's used to coach my son's soccer team. Both him and I were coaches about 11 or 12 years ago for my son's, you know, soccer team. And anyway, so he's my workout partner, and we're sitting there at the gym. This guy's looking at me, and I'm doing leg presses, and he's looking at me all funny, like, and he's looking on his phone, and I'm like, this dude's like keeps staring at me. He walks up to me, and he goes, "Hey, you're Blake, right?" And I'm like, yeah. And then I recognize him. He goes, "Yeah, I'm Rob. Rob, you remember me, Rob? I used to trade with you back in block trading in 1996. And I looked at the guy, and I'm like, oh my God, I haven't seen you in 28 years. And he goes, I knew that was you. He goes, you are fat as beep, beep, beep. And he goes, but because he's a New Yorker. And he goes, but I knew that was you. I'm like, dude, that was hardcore. He's like,
yeah,
you know, kidding it. We were joking. Anyway, it was crazy.
Well, New York.
He's a total New Yorker. That
they're a little different. They're a little different.
They are.
They're not like Chicagoans.
Blurts it right out. And I'm like, hey man, okay, I've gained 20 pounds in 30 years, you know, off my back. But it's funny. I hadn't seen the guy in like
they have no filter. So. And they have
Zero.
to say everything they think.
Zero filters. Anyway, hey,
do
Ryan,
you resemble
thanks for joining us today? Really good to see you. And thanks for holding down the Flow Show. By the way, if you guys aren't listening to the Flow Show, listen to Ryan. K-Man's out still this week, but Stelios is going to be taking over Wednesday and Thursday. Is that correct, Ryan?
Thursday, Friday, I think.
Thursday, Friday. Okay, so Stelios is going to be in the hot seat on the Flow Show at the end of the week. So make sure you're keeping him company there, and make sure you're keeping Ryan company here while K-Man's out. And Dale, have a great interview with Katie. Love Katie's technical prowess. So
thank you, Blake.
Yeah, it's good to see you, Katie.
You too.
All right,
Katie.
Hey, Dale. Good morning.
Strategies. Yes. How are you?
I'm good. Enjoying the summer.
Okay, well, good. I want, the key question most market participants are asking is, was that a low in the S&P that's going to generate a new all-time high, or should we be selling retraces in the S&P?
I think we want to be selling the retrace on this one. We're seeing it as a short-term low, and that's already evident, I guess, at this point. The S&P futures now about 5% above that low. And, with that, we do have this pretty cool positive divergence in the daily stochastics. So I do think we'll get more out of the bounce. If you notice here that the green line, that's the 50-day moving average. It also aligns with the upper boundary of the cloud. So that's our sort of so-called initial resistance area for the futures. Back here, we had sort of a similar price action.
Where's that come in, Katie? 5,500?
So yeah, 55.03 initially on the
Okay.
futures, so the front
All
month.
right.
And if we go back here, April saw the pullback right into the cloud, and this marked a pretty good breakout. So if we saw that, that would, maybe give a little extra to the relief rally. However, it's a little different than April was.
April.
Yeah,
Yeah.
because we
More
have
damage. More
more
damage.
damage. Yeah, and
Okay.
you can see it better on the cash, but you can see with the
Yeah.
MACD on this weekly, you have a lower high. And, in April, we had still no negative divergences there. And you can just see the negative momentum intermediate term. And with that, we have pretty widespread overbought downturns on the weeklies. And that includes pretty much all of the mega caps, even Apple, which has held up relatively well. You have, like, here's Apple on the weekly bar.
Yeah.
You see this good follow through, almost reached the measured move objective from its breakout. And now you see again here another negative divergence and downturn. So it feels like we want to sell into strength just to avoid what could be a seasonal September corrective phase.
Do you have any area in mind? If we take out that low 5100, could it be 4300, 4500,
Yeah.
or we're just gonna, just simply just, take out the low, or because under that low, Monday's low to me on many different instruments, unrelated, even though they all kind of, it's all been one market. Under Monday's low, the market's going to look, all these trades are going to look very, very negative to me.
Yeah, I would think so too, especially if
Yeah.
it happened quickly, right? Because then you'd
Yeah.
see some bear flags unfolding. But I think we'll get a little bit more out of it. This is the S&P cash on the daily. And
Yeah.
again, you see that it held the cloud. In terms of levels, so the bottom of the cloud as of today will be 42.87, or I'm sorry, 52.87.
Okay.
You see how it moves higher over time.
Yeah.
The secondary support is, I'd say, let's call it roughly 5,000, right? A nice round number. It encompasses a previous gap, some lows, and the 200-day moving average, all in that zone.
Okay.
The way the weekly gauge is set up, I would say 5,000 would probably be conservative as a downside objective, just based on how much room there is to oversold territory and usually how long that takes to get there. So we feel like 5,000 is too conservative, albeit a support level, but maybe you see, sort of a stall or
stops and holds
yeah.
for a little bit, then gives way.
This
Yeah,
is the secondary level. Yeah.
Yeah. Okay. All
So
right.
if you go back to the former resistance from 22, that's around 48.10. And you see that it aligns with the Fibonacci retracement here. So the 48.10-ish to the 48.37 area, that's your secondary and definitely more significant support. You see
That
how
was a breakout, Katie, at 4,800 from the 22 high, or 21 high. Yeah.
This was our first good breakout here, and then obviously a subsequent one. I think this, though, seems too aggressive, right? So 5,000 may be too conservative. This 4,800 plus level a little bit too aggressive, perhaps, based on where these stochastics stand right now.
Well, I was long vol, but that
good.
surprised me. Okay, I want to ask you what you were thinking when you saw that happen, and if in some way, first of all, I know, there were ETF funds that were executing selling vol strategies, and these guys had just been picking up quarters off the sidewalk for years. Only time they got tested were some tests, VIX would get up to 20. Then they'd sell vol and go back to 12. But even though it was lopsided, the positioning on it, and I think a lot of it was short covering, I'm not even sure if it traded. They put no premium in the options when this happened. It's really, you could probably, I'll never trade a VIX product again. Okay.
It definitely is high risk. I advise the same to my
Well,
clients.
it's not high risk, it's crooked. I had 20 calls, 20 strikes. It went to 60.
Wow.
They put no premium in there. It should have been 40 intrinsic.
Yeah.
Or at least 20, 30. You know what it was? 4.
Oh my God.
So they saved their asses by not, making a market.
Yeah, that's
Uh,
really crazy.
a-
So,
anyway, but besides that, enough of my violin playing. Just another interesting war story I have after doing this for so long, where I should have made money and I didn't. Um, does it give you some type of vibe that all is not well when the VIX can do a round trip like that in 24 hours, that there might be some issues with liquidity,
mhm.
or just market structure?
Well, listen, any kind of VIX spike of that magnitude is definitely a little bit jolting, and it does put us on the lookout for a greater loss of momentum. I mean, the long-term momentum behind the equity market is still positive. However, this suggests that we'll get into more of a neutral phase, right? Because if you go back and you look at past VIX spikes, the big ones like this one,
Yeah.
they do tend to give way to equity markets that are really just more subdued at best in terms of their upside progress, right? It's more sideways to lower than it is a bull market cycle.
So,
So,
yeah.
yeah.
So it's like there was a shock. The market
Mhm.
had an auto wreck,
Yeah, it was
and
definitely
it's in
jolting.
shock trying to stabilize now.
You can see it
Uh,
best really on this monthly chart, just the magnitude of that.
yeah.
And also the magnitude in terms of the impact. We started talking about it in May when this monthly MACD started to turn. And then we
Yeah.
got the more decisive upturns, of course, with this like jolt into the high volatility cycle that we think is now underway. So our call has been that as of, I guess it was April of 23, that we were in a low volatility cycle that has now culminated, and we're getting into this. So we think this is the beginning, in other words, of a high volatility regime that could last, I don't know, 9-12 months, just based on history. So
Okay.
it'll make it a little bit tougher in a way for the equity market, but in a way also potentially easier, because with this, more volatile tape, I don't think we're going to see the same concentrated leadership from the mega cap complex that
Yeah.
have gotten accustomed to. So for active managers, that's in a way welcome, even if it's associated with more volatility.
Okay. So, before I get to the sectors you like, well, let's go. Okay. So the opportunities are going to be where, the argument that, the big rotation day where we had a record day in the Russell and they were rotating out of high tech, mega cap tech.
Yeah, yeah,
That was really a significant day.
totally
Uh, le-
agree. Yeah.
yeah. So, is that where you're looking for buying opportunities? Maybe smaller
Yeah, listen,
caps?
so because we think that there's going to be a deeper corrective phase,
Yeah.
and you'll see that in this report from last week, we moved neutral long term after having been bullish
Yeah.
since late 23. So we think it is fairly significant. And with that in mind, we're not recommending new positioning, right? So we're saying, for the most part, especially with this bounce underway, to hold existing longs. But we'd rather use the bounce to sell as opposed to buying into the strength. So we're not
Okay.
like really adding a lot of new long ideas. This week we added Church and Dwight, which of course is quite defensive. But with this sort of breadth transition, we feel that the opportunities will be more small and mid. You see that in the ratios as well. If you take a ratio of IWM to the S&P 500, you will see that there's a notable shift in relative performance.
Yeah.
So this is a retracement, of course, with the oversold bounce. And even this morning, we talked about the real estate sector as having the same kind of outperformance over the past month or so. So the same areas of the market that have outperformed over the past month or so probably will be a source of at least inline performance, if not better relative performance going forward. And this is notable because, of course, it follows a really persistent downtrend in these ratios behind small caps and equal weighted benchmarks, et cetera. So already, even on our DeMark work with the IWM ratio, you see what's a 9 buy signal, meaning that just the pullback in that ratio should mature here pretty soon. So we feel like it's definitely a meaningful shift, and it'll make it easier to make money and outside of those mega caps. But we have to also let the top down influences guide our positioning and market timing. because
Yes.
obviously we want to you know, have a higher conviction entry once our weekly metrics look better. Anything you pull up, IWM included, you can see this stochastic downturn. We just want to see something better out of the stochastics, out of the MACD, before feeling like we can go build or rebuild exposure in here. We've been recommending fixed income proxies like TLT as having, you see this big inverse head and shoulders type of formation. And of course, with that, we have a pretty major reversal lower in yields. And I think we'll see more of a bounce here near term. But the cloud model, you know, our cloud, you can see here it was penetrated by yields with this move. So this was about
under 420 was the number.
Yeah, and I mean it's really notable, and it just affirms what we've already sort of gotten used to here, which is a cyclical down move, but still within this secular up move. So we think it will culminate in a higher low. That the support is next around like 3.25-ish, and you know, we feel like that's certainly a possibility for yields going forward.
I wanted to ask you view on gold and the dollar. I think, I don't know, a couple months ago you were negative gold. Have you flipped and you're long gold again?
Yeah, we've been bullish gold with the breakout from that big long-term trading range. So we've been more constructive on it really since that range culminated with this breakout. So back in here.
Okay. All right.
So, and we're still bullish. You know, it doesn't have great momentum right now, but we feel higher highs, higher lows. And we also feel with gold positions, you get this nice diversity from equities too. So we're comfortable with it for that reason as well. So just look at the moving averages, look at the cloud, they're all pointing higher. And it's
I'd love a
weathering.
pullback towards that moving average. I don't know what would cause it, but
I think with
2240, I mean, you can't find a gold bear anywhere.
No, I really, from a technical perspective, nor should you, right? I mean, here's a loss of momentum that's being weathered really well. There is an active DeMark counter trend signal that has implications for another few weeks. So we think that maybe the upside will be limited here very near term, but that it's a solid uptrend that we want to stay on the right side of.
I remember, well, look, we talk every 3 months ago. 3 months ago, you were constructive on the dollar. I believe the dollar has spoken and that we're headed lower. I particularly like the commodity currencies, Canada being one. Have you changed your view on the dollar, and can you be bearish?
We've changed our view, Dale, multiple times.
Okay.
It's and I always tell people, you know, if you find yourself changing your mind often, it's probably a trading range.
Yeah, that's good.
And you can see it here on the weekly dollar index. I mean, it's really been range bound. Within the range, there are some signs of exhaustion on the DeMark work, but not high conviction, because in a trading range, you know, that's not really the nature of those signals. So we are not constructive on the dollar. We do think it will weaken further. Right now, it feels like probably has a near-term floor, just more consolidation, digestion, sideways action, that type of thing, being pretty oversold within its range. But you can just see, I mean, it's almost like a triangle formation,
a descending triangle with the high being 114 and call the floor the floor right there at par.
Yeah, you could just draw it really. However, you know, these triangles, like, they're so high probability when they're completed. So that's what we've been focused on in the dollar index. You know, we feel like it's going to ultimately probably resolve that lower, having already taken out the cloud-based support. But near term, I think it's probably more neutral than anything else.
All right, check out the Canadian, Katie, because of the COT setup of record short and record long positions, record long large funds, hedge funds, large short commercials.
Yeah,
so,
kind of interesting, right? I mean, this is still obviously an uptrend here, with very good resistance, but a breakout above that resistance, of course, would be really meaningful. And really, it's more, not even this high, it's more this high. So 138.62, 2 weekly closes above that level to us would be a pretty big breakout there.
Well, last week was a key reversal to the downside and took out the prior 2-week close. I use a 2-week reversal. So
Yeah. So
yeah, that's a signal.
I love the DeMark indicators as it pertains to some of these, where when you see a 9 unfold, you tend to get a brief countering move. Today
Yeah,
we have a 6. So let's say later this week, if we're focused really short term,
yeah,
we could get a minor low here, right? And then theoretically, if you think that this momentum will continue to weaken, you should ultimately run to a 13 on the flip side, right? So
okay.
the DeMark work has been really, really helpful. This morning, in fact, I heard you all talking earlier about a counter trend trade versus S&P. Here's the S&P futures. This is a chart that we put in our morning note every day. And I just, again, here love how the DeMark indicators can guide us just in terms of inflection points intraday, with implications really only for the next day or so. So this is very, very like hyper short term. But notice as we make this retracement coming up on the 61.8% retracement here, there is the first countering signal. So that's really just as of this current hour or bar.
Okay.
This is a 60-minute bar of the S&P futures.
Okay. Why don't we wrap it with, I know since we've been talking for quite some time, you've liked the oils. It's been, kind of wide ranging sideways, but it looks like it's trying to make a move here, Katie.
I would agree.
Based on,
We actually have a triangle here too, long term for crude. And it's been our belief that we'd see it resolved higher. And
okay.
we say that not with a ton of confidence. It
Yeah,
certainly has been taking its time, right, within this triangle formation. But there are some indications sort of behind the scenes that we'll get ultimately a breakout above this downtrend line, which is, increasingly surmountable in terms of it, week over week. So we feel like we're going to see it resolve to the upside. And because these triangles are so high probability, we feel that it would see immediate upside follow through. So, and we also like the energy stocks in a way. They've been relatively over.
Exxon, I saw Exxon just broke out last week.
Yeah, and I don't know if they're anticipating perhaps this kind of breakout in crude oil, but again, here you can get some, a diversification, right, from the energy sector that tends to have a mind of its own. And if we were to see Exxon for one, you see the resistance area is basically in line. So if we start to see that.
Handle.
Yeah, right. If crude advances from that triangle, I think that's where we really can assert a position. And it could honestly be something.
Yeah, Middle East.
Including copper, its corrective phase. So.
Okay. And I just want to let people know that Katie has her own ETF. And, if you like what Katie does, and she's very good, very good. Let me ask you,
Thank you,
Katie,
Dale.
on your ETF, for example, you're looking for some downside in the S&Ps. Can you do anything in your ETF to take advantage of it? Do you have the parameters to take advantage of maybe bearish ETFs or anything like that?
So the way we're managing risk in the ETF is through asset allocation primarily. And we have 3 what we consider to be like risk off positions that we'll take. One's essentially our cash equivalent, which is short-term treasuries.
Okay.
We also use long-term treasuries and gold. So together, those 3 provide sort of diversified risk off exposure. And it helps a whole lot, as you can imagine, during the downdrafts like in 2022. Very significant outperformance in that kind of environment. And really also in corrective phases, tech has outperformed the S&P by a very strong degree. And that's part of its design, of course, is to limit those drawdowns. So we're really pleased with the performance. And I do expect with this corrective phase to move very slightly risk off. When we tell people we would sell into strength, we're not talking about, sell the whole, market or sell your 100% of your positions, but rather just risk, manage risk, right? Maybe reduce partial exposure, whatever's comfortable from a risk management perspective.
Okay. Katie Stockton does it again. covers the whole board. Anything else that we haven't covered that you'd like to share?
Yeah, dollar yen. I heard you talking about that
Okay.
as well, and I know that the cloud model isn't as widely used for your group here, so I thought I'd show that because I thought it was really very interesting. When we see here's dollar yen, look at it
Right.
just having come right into that
Right at
cloud.
the bottom of the cloud.
Isn't that
Okay.
wild? And that's what
Yeah.
happened back in here.
See, you're still amazed like I am when these things work
Oh
and
yeah,
price
yeah.
reacts to them.
And
Yeah.
I think for of all things that it should work for, it should work for a Japanese currency, right? Because that's
Yes,
where the
that's
model
right.
was developed, and it's
Yeah.
wild. So we also, I think it's a great lesson as to why we always wait for confirmation of breakouts. You see these false breakouts back in here, so we always wait for a couple of weeks.
Yeah.
So we actually do think the lower boundaries at risk of breaking, probably not here in the very near term. But ultimately would continue to watch this lower boundary, currently 140.77. But you can see, looking at just to October, it's closer to 146. So ultimately, we think that will break.
So the yen, Katie, after a long hiatus, is acting like a safe haven currency.
Yeah.
How about that?
Yeah, exactly. Who'd have guessed?
And do you believe that they're 75% through the unwind of the carry trade? Because people act like, they just started putting on this trade 6 months ago.
Yeah.
This trade's been on for years, the yen carry
And
trade.
that's right. I know, and I don't think that's probably measurable, right? So it's
Yeah,
speculation, and this is meaningful. This is
yeah.
really, these are the monthly downturns that we have here.
So
So
that paints a pretty, if you believe in the correlation, which I do still, they've remarried the yen and yields. And they
Oh yeah.
got back together and they're, going to try and work it out, get some counseling this time.
There you go.
So,
And I think, sideways to lower here too, just like for yields, right? And maybe it
yeah.
floats back into the monthly cloud here, which in 2026 resumes to the upside.
Thank you so much, Katie.
Of
I
course,
always look,
yeah.
I always look forward to talking to Katie, and everyone here does, enjoys it. You've helped me today
Oh, good. I'm
because
glad.
I was a little, conflicted about the S&P because I saw the potential maybe we get one more blow off for a third drive to a top. But, um, you know, uh, I spoke to a legend last week and he said we have to consider all possibilities.
Hmm.
And that means that you have to understand both the bull and the bear case, not just your side or your narrative. You have to take a look at what the other narrative is. Do you do that?
I read a lot of research, yeah. And I
Yeah,
think it's really fascinating how, especially technicians, right? How we can look at the same charts and have different takeaways.
yeah,
And it often comes from the indicators and tools that we're using, but
yeah,
always valuable for sure.
yeah. All right, Katie, thanks so much. I hope you have a great summer.
Thank you, Dale. You
Um,
too.
and and I'm a fan, and I think that people should check you out at fairleadstrategies.com and give your ETF a look, especially if they don't have their hands on the market and with their retirement type money,
Yeah, for sure.
because that's going to, that's your nest egg, and diversify away from yourself if you're handling all of your retirement accounts. And her ETF is like having, Katie manage your money for a lower fee than a hedge fund.
I
That's the way
appreciate
I
that,
see it.
Dale. Thank
So
you.
thank you, Katie.
Of course.
I'll catch up with you.
Yeah, sounds good.
I'll talk to you on X.
Okay, that's a
All
deal.
right.
Take care.
All right. Katie Stockton, everybody. Great presentation, leans towards selling this rally, maybe not right away. Mind changing on the dollar, bullish bonds, still likes the oils, bullish gold. That's it. You're a fan too, Saloon? What's your OnlyFans? Oh, okay. I don't have any fans. Okay,
You do,
Michael.
Dale. I'm your
Oh,
fan.
I have a fan.
There
All
you
right, now,
go.
and
Take
you know
care.
what? I need one. It's going to be 98 here today. So thank you, Katie.
Of
I'll
course.
see you. All right, everyone, don't just count your pips, count your blessings. Having great people with good research and great ideas, if you don't know, is a blessing. And Katie plants good seed. She has no axe to grind, whether you buy her ETF or not. She came here to share ideas that took her, years to become good at. So you reap what you sow. And so I'll see everyone tomorrow. Adios. Thanks again, Katie. You're welcome, everyone.